What's up, everybody? Welcome back to Trizzy Trades, where I can take you along my trading journey for my wins, my losses, my pains, my joys. But hopefully I can teach you something along the way. If you like the content, please make sure you hit the like button, subscribe if you will, comment if you want, but let's not waste any more time. Look, there's all the hype around options trading. A lot of people make a lot of money, but there are also a lot of people losing money. Then there's people that have no idea how to make an options trade at all. If you fall in category 3, this video is for you. I'd figure I'd show you how to do an options trade by redoing a trade that I got in recently. Even though there are different platforms in which you can make options trades with, an options chain is relatively the same with all platforms. The platform I use is Thinkorswim. So let's start there. Here is what an options chain looks like. I am sure all the numbers and stuff is pretty confusing, but I will do my best to explain it to you. An options chain has two sides to it. One side is for call options and one side is for puts. In the middle, you will see the expiration date along with a bunch of strike prices you get to choose from. On the call side, you can either buy or sell call options. You buy call options when you think the stock price is going up. You buy puts when you think the stock is going down. The price you will pay for the option that you want is under the ask column. That is the asking price of the option you want to buy. The price you sell the option for is under the bid column. Now, there are several strategies people use with selling options, but for now, let's just stick to buying. The option chain is broken into sections according to the expiration date. There are weekly options that expire on the Friday of that week. Monthly options, the expiration date is always on the third Friday of the month. The shaded regions on both sides of the option chain are considered in the money options. In the money, call options are all strike prices that are below the current stock price. In the money, put options are all strike prices that are above the current stock price. The unshaded regions are called out of the money options. Out of the money call options are strike prices above the current stock price. Out of the money put options are strike prices below the current stock price. As an example, I will use a stock that we all know and love, Apple, ticker symbol AAPL. And we will look at the options that expire April 19th, 2024. You can see how the option prices get lower the farther out of the money you go, and higher the farther in the money you go, which makes sense because if you want to buy 100 shares of Apple for $170, even though it's trading at $180, you're going to have to pay more for that. Let's say I think the price of Apple is going up, so I decided to buy a call option that expires April 19th, 2024 at a $180 strike price. So I click on the ask price of the respective option, and that pulls up my order ticket. You know you are buying because the order is green. If you are selling, the order would be red. Here I choose the amount of contracts that I want to buy and the price that I want to pay. There are several different order types, but you should keep it on a limit order because you can set the price that you are willing to buy the option for, and your order will be filled for no more than that price. Sometimes you get lucky and get filled for less. Now I check, make sure everything is in order with the option I want to buy, the expiration date, strike price, whether it's a call or put, and even when you want the order to cancel if not filled. If everything checks out, I hit confirm and send. The confirmation will come up showing how much money you can win and how much money you can lose and some other stuff. If everything checks out, you will hit send and you just made an option order. Once you get filled, you will be notified or it will just show up in your positions. Now let me show you a call option I recently bought along with an update of my portfolio. The name of the company is Bristol Myers Squibb. I don't know if anybody says Squibb. Everybody just says Bristol Myers. Ticker symbol BMY. They are one of the world's leading pharmaceutical drug companies. Unlike Johnson & Johnson or Moderna, or even Pfizer, they never brought a COVID-19 drug to market. This might have helped them a little bit because when the attention of COVID-19 died down, the profits didn't. But we'll get to all that. Let's look at the chart first. Bristol Myers had a bad year last year, falling over 40% from its all-time high. As it entered a strong weekly support zone, it went oversold on the RSI and also put an RSI divergence. This suggests that the downward trend is showing weakness. I'm not saying it's going to be a reversal. I'm just saying it's showing weakness. Dropping down to the daily time frame, you can see a falling wedge pattern with an RSI divergence that is not as clear as the one that was on the weekly time frame. It broke out of the falling wedge and was going to retest the top of the wedge, but the 50-day moving average is holding it up. Now, with just technical analysis, I'm not fully convinced of this trade. However, When I looked at the fundamentals, I started to believe a little bit more in this opportunity. So Bristol Myers does not have the best balance sheet in the world, but it's far from the worst. Currently, they're sitting on a little bit over $11 billion in cash. That is more than enough to take care of its short-term debt if need be. The long-term debt is a different story. Current assets are well above the current liabilities, as are the total assets above the total liabilities. So there's no growth in their balance sheet, but it's still pretty solid. Now remember, the stock price has dropped 41.77% over the last year. However, over the same year, revenue has only dropped 2.5%, and you still see growth with an 11.47% 5-year compounded annual growth rate. Net income put in a record high $8.025 billion, growing 26.84% year over year, and an 18.47% compounded annual growth rate over 5 years. And since the current market cap is $103.3 billion, the P ratio is just 13.18. That means the stock is really cheap right now. Here, I'm getting a little more interested, but I still need to see the cash flow statement. Operating cash flow was $13.86 billion. And with CapEx not being so high, Bristol Myers produced $12.651 billion in free cash flow. That gives us a 5-year CAGR of 11.84%. With that kind of growth in free cash flow, a discounted cash flow valuation of Bristol Myers will give us $305 per share. Now, I'm not saying the stock price will ever get there. All I'm saying is the cash flow statement did not disappoint. Now, the fundamental analysis did not convince me on its own, but with the technical analysis and the fundamental analysis, I think this will be a good opportunity as long as I give it enough time to do what I'd like it to do. So let me show you how I did the trade. Okay, here's the option chain for Bristol Myers, and I'm going to deal with the expiration date of January 17th, 2025. That means I'm giving this trade almost a year to do what I need it to do. The current stock price is $50.89. And I like choosing options that are a little bit out of the money with the hopes that my option will work its way up to being in the money. That's when your option starts to grow significantly in value. I want the highest open interest possible, so I went with the $55 strike price. That means I'm $5 away from being in the money. I click on the options price that is in the ask column and an order ticket pops up. I usually go with an even amount of contracts, but my risk management strategy told me I can do 5 contracts. The price I paid was $2.74 per share. Now remember, each contract represents 100 shares, meaning that the contract itself was $274. All right. Everything seems to be in order, so I'm going to hit confirm and send. One last confirmation pops up showing me how much I'm paying for the trade, along with my maximum profit and loss. If everything's okay, I hit send and I just made an options trade. Now I entered that trade on February 27th, and here's how I'm doing so far along with the rest of my portfolio. So it's been about a week since I made that trade on BMY, along with some others. Currently my Bristol Myers trade is up 43.25%. Now my rules are, once I hit 100%, I take off half the position and let the rest run. In this case, I have 5 contracts, so I'll probably take off 3. Usually trades don't jump like this in a week, and remember, this trade doesn't expire until January. So I'm feeling good about this trade. As you can see, some of my trades are up, some are down. What they all have in common is the expiration date is a long way away, and throughout that time, it's likely we'll see some ups and downs. For example, in my Google trade, there was a time I was up 50%. There's also a time I was down 40%. Right now, I'm about at negative 19.25%. But either way, I gave this trade till September to get its act together. Hopefully, we get that 100% we want. I will keep you guys updated on my progress. If you like the content, give me a like, comment if you can, subscribe if you want.